Good morning, everybody. It's Chris from Serene Education with the 4 majors announced update for the 8th of October 2013. Okay, 4 majors, looking at the 4 majors this morning using the FX8 Ultimate template as we go along. So, what do we have? Well, Euro US dollar to start with, daily. And what have we seen over the past couple of days? Not much movement at all. It's still moving slightly higher. The concern is, are we seeing a change in market sentiment? Pretty much waning here. You can see that we have seen some slight movement, especially through the latter part of last week in particular. However, the Sunday open, Monday in particular, not much movement at all, hugging the upper end of that bandwidth, but that bearish engulfing candle we saw on Friday, which has taken us back to the prior consolidation that we had at the start of last week in particular, coming into play. It's still standing above that, which is good. It's still trading above my monthly fib line here, the 50%, which is still well above the 1345 and 40 change. So still making swing highs. The long-term sentiment is still very much favoring the upside. However, we're getting a bit of a mixed bag intraday. The R squared is complementing both the long-term sentiment as well as that negative sentiment intraday. So we are seeing some consolidation intraday, and we are seeing a lot of indecision candles, a lot of spinning tops, and you can see that the OSMA down the bottom here pretty much flat, very indecisive nonetheless. So yes, looking for longs primarily because it's still above the long-term monthly fib here, which is good. We should be targeting the weekly fib above us, which is back to the current highs that we've seen just recently, but also back towards that monthly high on the 61.8. That'll be our ultimate target. We are some way away from that, and if we look at where price is trading to that level, there's still a healthy 152 pips. However, if we don't see any push movement soon, then we might see price folding even further and reattempting the 50% retracement level down at the bottom here. So if we go into our 4-hour time frame, you can see that we have a lot of negativity on some of our indicators. The R squared is complementing that negativity intraday, but you'll notice that my institutional moving average as well as my RMO are still telling me that there's positive upside. So what we can do is, if we are to see further negativity intraday, is to use primarily the institutional moving average on these time frames as a particular target. You can see how far that particular target is away on our 4-hour time frame indeed. So notice here quite clearly over the past couple of days, we haven't seen any new highs. Okay, if price is to be positive and moving upside, we do need to see swing highs. Okay, you can see we had a swing high, swing high, swing high, swing high. The intermediate trend is looking up, but we're not seeing any current new highs. We had indecision here a couple hours ago. Price moved higher, failed to break that current high that we saw yesterday, and subsequently the last 4 hours in particular has been back down further lows. It's still, however, now testing this intermediate trend, and it's still above the prior support and resistance level high that we saw at the start of last week. So we are still consolidative, and the RMO is still above. So my trend is still strong. Well, yep, still strong, still above. However, I'm seeing a bit of consolidation now, some indecision. We've been indecisive since Wednesday of last, and we've seen price falling. And if she's falling, she's going to make swing lows. However, you can quite clearly see we saw swing low, but we didn't make a new swing low or break this current intermediate trend, and subsequently we are now being squeezed between last week's resistance high and the intermediate trend up. So what's going to happen? So looking at the news, we had German trade balance figures out earlier. Positive figure came out, slightly higher, 0.5, better than the forecast, and price has not really done much. It's still very much consolidative. So I think in order for price to be moving, I think the actual thing that's on everybody's mind is obviously what's happening in the US market at the moment regarding the US shutdown. The longer that continues, the more it's going to be of concern, and that's also that it's also going to reflect badly on the US dollar, primarily because of the fact that they'll also have to start. They're going to be shortly be voting on raising the debt ceiling. That's going to be quite interesting in itself. So the longer, I presume it's potentially moving sideways, primarily because it's very indecisive, primarily because they're still waiting to see what's going to happen with the US market. So still above the long-term 50% retracements here on our monthly. So as long as it stays above that, then it's still looking for longs. However, intermediate, we want to see now this pullback to a price support and resistance level here, we want to see a confirmed bounce. And every single time we've had a slight bounce, it hasn't been with a lot of sentiment or positive sentiment to the upside. And the longer it fails to break these current highs that we're seeing at 13, 58, and 21, the more likely is price is going to start favoring the downside. Moving on to sterling against the daily chart. Let's have a look. Here again, same thing. We've seen a nice positive trend for this particular pair since July of this year. Nice swing highs, really aggressive, getting above that institution moving average and kicking on quite aggressively to the upside. However, near term, you can quite clearly see that price attempting the weekly fib here at the 23.6 on one occasion, failing to get above it and pulling back, finding some support, and then reattempting that current weekly fib high. Getting above it, in fact, we had an indecision candle. The decision came out. So now getting up above it, now we wanted to see the pullback and support candle being forged before we saw the continuation. However, that failed to materialize because we saw selling through the latter part of last week in particular. Selling through Friday, then Sunday, finding support on the price support that we saw last week. And yesterday we saw a slight bounce higher. So finding support. So here again, we are looking for that upside to be in favor. You'll notice that the candlesticks are still positive, so it's telling that I should still be looking for buying sentiment. However, there is a red arrow confirming that we should be seeing consolidation, or it's a heads up. And sure enough, the longer we fail to break above this 23.6 weekly level here, then ultimately we're going to see this red arrow continue to be the number one concern. So prior resistance, yet again, we had a failure here. If we don't see sterling actually finding or breaking this level very soon, then ultimately what we're going to start seeing is that negativity playing out. We are seeing consolidation issues here on our OSMA reading. However, if it's to be negative intraday, we do need to see this current support and resistance level here at the 1600, the psychological round number. That being breached, will also break this trend line support, this intermediate trend line. And then what we could look to do is target the 50 period moving average on our daily, and then back towards that weekly low here at the 38.2, which is the prior support and resistance level, the major one. You can quite clearly see we had resistance levels here through June of this year, as well as again on August of this year. So if we do see price breaking below this anytime soon, that will be our ultimate target. And the difference between that level here, that support level, to that current low at the 38.2, you're looking at a healthy 318 pips and change. So if this is still to remain positive, do you need this current support area here to maintain? But failure to do so, and we see a bearish engulfing candle close lower anytime soon, that will be our target. The upside at the moment now is what we're looking for. So look at the 4-hour time frame. You'll notice the indicator box, guys, very, very negative intraday. Okay, more negativity on the hourly down to that 5 minutes, more positiveness on the long term. So we know we're in a positive uptrend. However, our intraday is very much consolidative, and you can quite clearly see long-term up, consolidative intraday. We are seeing pullback, swing lows. However, as long as this major support and resistance level, last week's support and resistance level, stays in play, then ultimately we should still be looking for buying opportunities. So here you can quite clearly see the past couple of days moving higher. The last 4 hour in particular actually consolidated under the 20 period moving average. So looking for buying opportunities. So what we want to see now, the candles are still blue. All we want to see is that blue arrow. RMO needs to maintain above the zero line, and the MACD is obviously on the positive side, so which is good. However, we don't see that blue arrow, and that's exactly what we need to see now. The last arrow, or the arrow that's in play right now, if you look back, is only the red. So we don't have a confluence, a genuine entry signal. So we want to see a blue arrow, blue candle, RMO above, MACD above, and then we target the near-term resistance level, which will be our weekly high here, which is the 22.6. US dollar Swiss franc on the daily. If euros moving higher, then we should be seeing weakness in the US dollar Swiss franc. And sure enough, we have seen the US dollar falling recently. Tweeze the top here, the institution moving average, swing low, swing low, swing low, swing low, swing low. However, as we've got closer to that weekly fib, as well as the monthly fib here, you can quite clearly see they're both trading very close together. So confirming a very strong support in this case, because price is moving towards it. You'll notice that there's been a major slowdown in price, and we've seen the same thing happening on euros. So notice the last week in particular, we had a lot of support, and then we had the breakout, then the continuation. However, end of week last week, we saw Friday the US dollar rallying into those price support and resistance levels, failing to break above it. So this is currently a major resistance level now. And then Sunday evening, failed to get above it. We saw selling yesterday on the market, however, consolidating on the Asian session going into the European session this morning. RMO is still below, so we should still be looking for selling sentiment, guys. As long as this support and resistance level here is in play at 90, what are we looking at, 90.79 mark, then we should be looking for negativity. The last arrow is red, candlesticks are red, RMO below. The only thing that's not in our favor is the fact that this awesome, the MACD indicator is now painting green, and that's only going to show because we've seen consolidation. So look at the intraday sentiment, very much positive. However, the long-term sentiment very much negative. So it's telling me that we're seeing buying against the long-term sentiment. We don't want to be doing exactly that unless we actually see a breakout above this current support and resistance level here, and then we can target back up towards our weekly fib here, which is up towards those monthly fibs, which is also next to where our institution moving averages. So that's going to take a lot of momentum. We've had a number of occasions where it's failed to actually get above that level. So the overall sentiment for me is still looking one of negativity. Look for shorting opportunities until we actually see a daily close above this level. Okay, so on our 4-hour time frame, you can see here that my institution moving average and my RMO are both negative. So it's telling me that the institution is above price, and that's still going to be a negative figure. And you can see that we are still making swing lows. Okay, we're not making swing highs. The actual prior swing high was the same level as the other one. So that at the moment now, price is trying to reattempt that level. If we do see price getting above this, the support and resistance level that was primarily in play last week, then we're going to start seeing the bias being positive or buying. Okay, but until that happens, we're still looking for negative because the candles are still red. We're just looking for, and the overall trend is still negative. As you can clearly see, we should be looking for a red arrow, bearish engulfing candle under here, and then target the current lows that we've just come from, which will be down here. Between these 2 points, there's a healthy 100 pips. And if we do see a close below the current consolidation low, which is this intraday low that we've seen over the past couple of days, then we could look to tap into this over here, which is still a healthy 56 pips away. US dollar, Japanese yen. Here again, we were in a squeeze pattern for so long. I want you guys to see this. There we go. There, we had a slight breakout of this consolidation, failed to actually hold on to those monthly fib levels and then kick on. We saw a lot of indecision and a tweezer top, and then price reverses to the downside. And ever since then, through the latter part of August going to September, you'll notice that the negativity started to play out. Red arrow, red candles, and price reverted back towards the institution moving average, bouncing on the institution moving average for a while, and then we had that breakout. And this is the first time we've seen a breakout or trading below the institution in a whole year, guys. This only happened back in October, I think it was the 24th of October of 2012. So this is a really negative signal for the US dollar. And you can see quite clearly now over the past couple of days, or yesterday in fact, actually breaking lower than the 23.6 on our weekly fib, which is a negative sign. So trading below today on the Asian session, pulling back. So breakout, pullback, continuation. That's what we're looking for. Okay, the breakout, the pullback, and then the continuation lower. Same thing, the breakout candle, the pullback candle, and then the continuation lower. That's what you're likely to see now because price is making swing lows. It's not making swing highs. And if it's not making swing highs, then it's looking negative. Okay, RMO below, or the MACD below. Look at the indicator box all over the place. The sentiment intraday pretty much favoring upside, and that's consolidation. So now my thought pattern is going to be 23.6 intraday is going to be my resistance level. If this is to be negative, then the 23.6 needs to be my resistance. So going to my 4-hour time frame, price needs to maintain below the 23.6 level, and then I need to see price actually giving way to the market. So we had the breakout over the past couple of days. Now we're seeing a pullback into play. Now the next couple of days needs to show me the continuation, the bearish continuation. Notice that the 20-period moving average in particular is forcing price lower, using it as a resistance level. We are seeing swing lows. We're not seeing any swing highs, and if we're not seeing swing highs, as I mentioned, we are looking bearish. So your thought pattern is to look for selling opportunities. The 4-hour candle in play right now has another 22 minutes to go until the close of it. If she closes lower, then we should be looking for equal drive lower. If she closes higher, stand aside because she's playing tic-tac-toe with this weekly fib. We want to see a genuine negative candle, guys. That's what's going to give us a confirmation to trade to the downside. So here, be patient. Wait for that 4-hour bearish engulfing candle to occur, and then short. Look for opportunities back down to our monthly fib, which is down here at 94.20. If we see a bullish engulfing for our candle, then you're looking for consolidation because we're still trading at this range. This only becomes positive once we get above this current price support and resistance level here at the 97.54. Until then, we are still looking for negativity, guys. Okay, so that's it. Very long today, primarily because I didn't do the analysis yesterday, but that's the analysis for the start of this week. Please have a look and see if there's any news announcements that's going to factor in price action. We've had a positive start for the euro this morning, as well as the Swiss franc. We have German factory order month-to-month figures coming at 11 a.m. GMT this morning, and then we have trade balance figures for the Canadian market, which is an important one. And then later this afternoon, we have the Swiss National Bank Chairman Jordan speaking. So if you are trading this US dollar Swiss franc, please be aware of that. Otherwise, the talking point is going to be the US market. What is it doing about its shutdown? Are they going to come up to agreement anytime soon? And then after that, we've got to also worry, in the background, we've still got to worry about their deficit meeting and how they're going to tackle that one. So there's a lot of uncertainty, a lot of question marks, and it's probably the reason why we're seeing a lot of indecisiveness on the market, a lot of hesitation, a lot of consolidation trading over the past couple of days as we continue with the stalemate between the Republicans and the Democrats regarding the shutdown in the US market. Okay, so take that on board, guys. I'll leave you to that. Have a fantastic trading day tonight. I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.